let's get a reader on that and many more currencies, given so much is happening at the moment. Nick Twidale joining us from FP Markets. Nick, good to see you.
Good to see you.
Our heads are spinning at the moment, are they not?
They are indeed, yes.
Yeah, so while we're on it, just as far as what we saw in New Zealand there out of GDP, I mean, obviously the RBNZ started hiking sooner than us here.
Yep.
And it's been aggressive, hasn't it? And continues to be so.
It has, and they're still remaining very hawkish. So it's going to be very interesting. They could be one of the first, I suppose, after the Bank of Canada, they could be one of the first that then actually we are looking at for rate cuts later in the year. And certainly with what we've seen over the last, I would like to say weeks, but it feels like hours and days, that might be a justified view moving forward. So I think interesting times for the Kiwi dollar. And obviously for the rest of the market as well. It's fascinating out there, but keep an eye on the RBNZ. They do tend to be on the front foot, so they're quite an interesting central bank to keep an eye on.
All right, maybe a sort of canary in the coal mine as far as Australia is concerned, but yeah, we have seen that obviously that effect on the broader economy. So taking a look at what's going on, given the fallout from, obviously we had SVB, now it's Credit Suisse is the focus, and more generally whether it's a systemic issue that the banking industry faces at the moment or whether these are isolated cases. How have we seen particularly that movement with the US dollar, where we did see that flight there to what is perceived as safety, of course, along with gold?
Yeah, it's been a fantastic few days for volatility, but not necessarily if you're long bank shares. I think that's what the market faces, the conundrum they've got at the moment is this systemic, or are these isolated incidents? Will the market recover nicely? And I think at the moment what we've seen, that flight to safety, safe havens, US dollar number one, but then gold has really taken off. And it's been difficult for gold traders because it has been trading in line with US dollar interest rates, and there we see the chart. It's one of the longer dated ones, I think. It's been trading nicely in favour of the US dollar side of the equation, but certainly last night and previously we've seen that safe haven statistic really take over, and you know, off that 1800 level to hit nearly 1950, the massive moves we're seeing in the market.
So are you looking at that and saying perhaps that it's poised for breakout?
I think so, yeah. I mean, I think the key to me would be what we get over the next couple of days. If we do start to see hints of more systemic issues throughout the global markets and throughout sort of the banking sector, then I think gold will break out to the top side. You'd probably be looking above where that line comes in and those previous highs earlier on in the quarter. Conversely, of course, if they do seem to be isolated, then I think you see a lot of gold sellers come in. So those guys, if they're trying to get ahead of it, they're probably going to be looking at these levels here. We really are flipping a coin, so I think you've got to trade what you see at the moment, how headlines come out, and then jump on the back of these moves because you're getting decent percentages.
Yeah, obviously this is encouraging for the gold bugs, and I'm seeing some of them really very bullish, some mentioning 3,000 US, which that would be a huge move.
Yeah, and then you look at the Aussie dollar then, and we've got that conundrum. Normally the Aussie gets smashed on risk, but with gold going through the roof, then it's probably going to be very supportive for the local currency. So there's so many moving parts when you get this kind of volatility in the market, and currencies can sway very, very quickly one way or the other.
Well, let's take a look at how this is driving currencies at the moment. With the US dollar index, it rose close to 1%. And obviously we also saw the euro come off significantly along with the Swiss franc, given what's going on with Credit Suisse.
Of course, yes. I mean, with the dollar index, you've got to remember that euro is nearly 60% of that. So big moves in euro, it got smashed, Swissy gets smashed, then you're going to see those big moves in the dollar. We did see other currencies come off as well, but to be honest, most of the currencies are still in fairly comfortable ranges of what we've seen recently. It's just the pace of the move that's really catching traders out. And as you can see from some of these charts, we're still sort of comfortably like 105.5, topping out maybe 1.1. The next 2 to 3 weeks now, I think last time we came on I was like saying 2 to 3 months, could be crucial. We've got the ECB coming up, obviously. They're still expecting at 50 basis points, and that's going to be a really interesting conundrum. Like, how quickly can the ECB adjust to what's going on in their local market? Relative to how and probably go back to the RBNZ. The RBNZ can turn and move a lot quicker than some of the big central banks, especially the ECB, that's got so many differing interests that come through to it. So interesting times ahead, and I think you've just got to trade the headlines at the moment.
So what? Okay, so that's the euro. What are we seeing with the Aussie at the moment? Given that's it is risk off. So has the Aussie suffered as a result?
It has suffered, but nowhere near to the same extent that we saw in the euro. So we dropped off a bit last night. I think one of the supporting reasons, as we just mentioned, is commodities. Gold in particular has gone up. I think some of the other commodities, oil dropped a bit last night as well. So there's the Aussie. That's
back
the
to
euro.
the euro again. Yeah, see if we can get the Aussie up.
But the Aussie dropped off, and obviously we've got a bit of a focus now coming up in the next few minutes. We've got the employment data coming out. It's quite a bullish number for the employment data, I thought. Don't get me wrong, I've not been crunching the numbers, but
right.
The feeling on the street is that things aren't particularly boyish in the Aussie job market at the moment. So I'm fearing another downside surprise, and if you combine that with risk off, then maybe the Aussie takes a bit of a hit. But as I said, while gold's up there, you're probably going to get support, and you're going to get a lot of the guys coming in and buying on dips. But it's going to be an interesting few days.
Well, it is amazing, isn't it, how quickly this has changed, because of now that we've got those market bets that we're looking at rate cuts at the end of the year.
Amazing, and I think a week and a half ago or 2 weeks ago, and then we were just talking about when the next and how big the next hike is, and now we're talking about those cuts because of what's happened, and it comes back to the thing we've been talking about at the start: is it a systemic issue for the whole global market? Or are these nice isolated incidents that can get written off? And the Aussie's trading very nicely to some of the technical levels, as you can see. So you fade that move, but I think what this does is it gives currency traders, it's giving them levels that they can look to jump in and take these big percentage moves as well. So sitting there, 66.17. Resistance is coming in not too far away actually, and you can see those highs. Just there on that sort of resistance trend line that's coming in. It gives people something to trade off of, and there's a lot of options interest in the Aussie as well, which is slowing things down, whether it goes topside or downside. So interesting to see where we go with the battler over the next few hours even.
Yeah, absolutely. Well, that's right. You're saying it is, previously we were talking about months, now it's weeks and even hours where things are moving so quickly. Nick, elsewhere, the yen, how are you looking at that at the moment? I just noticed it did fall to dollar yen down 0.5%, 132.
Yeah, we always used to trade yen and yen crosses very, very hard on the Haven trade. It's sort of fallen off, maybe over the last 12 to 18 months, but it's still prevalent because of the setup of the Japanese institutions. So, yeah, it didn't surprise me that you actually saw the yen appreciate on the moves that we saw last night. Once again, it's another one, and sounding like the broken record, but we really need to trade those headlines and see if the volatility we've seen over the last week is here to stay, and we're going to see a more bearish outlook and then possibly more dovish from central banks, or if this isolates and in 3 or 4 weeks we're talking about something else and we're back to focusing on the Fed, we're back to focusing on the ECB and the Bank of England, which will dictate those currency moves. But certainly at the moment, it's risks that's moving currencies rather than interest rate differentials.